Hey everyone, welcome to the KE Report in another daily editorial. This time chatting with Michael Belkin. Michael is the editor of the Belkin Report and the Belkin Gold Stock Forecast. I've chatted with Michael a number of times over the last probably decade now. It's been a couple of years since I last had Michael on the show, and I think now is a great time to highlight the Belkin Gold Stock Forecast simply because, well, we all know how well gold is doing. And a wide range of gold companies are continuing to do very well and even outperform those moves in gold. But I know a lot of our listeners, myself included, still see potential opportunities here of a number of other gold stocks playing catch up. So Michael and I will discuss the drivers behind gold, some of the stocks that he likes. We might even get into some silver stocks as well. So Michael, welcome back to the show. Let's start off by you explaining just a quick overview of the Belkin Gold Stock Forecast. What type of stocks do you focus on within that letter, please?
Well, thanks for having me, Corey. So just to give your listeners and viewers an idea of what I do. So I was a graduate of UC Berkeley Business School. I studied econometrics and statistics. I developed a forecasting model based on time series analysis. I was in the statistics department at Berkeley. That got me into Salomon Brothers in market analysis. And then I ended up in proprietary trading there after 5 or 6 years, applying my model to proprietary trading. I left there in 1991, started the Belkin Report in 1992. So I've been doing this for 33 years now. So I'm looking at a forecast direction, position, intensity. It's not like technical analysis where your chart ends today. The model gives a forecast of up, down, or neutral, position, beginning, middle, end, and strength or intensity confidence interval. So I started, about 10 years ago, in the Belkin Report covers everything, all the macro assets. I started the Belkin Gold Stock Forecast about 10 years ago, and I cover all the investable gold and silver stocks in the US, Canada, London, Johannesburg, Australia, and China. And basically, I'm looking for outperform ideas. So, my clients are big institutions. For the most part, they can only invest in things that move the needle. So they're not so interested in things that have a $50 million market cap. It's not investable for most of my clients. So at the moment, well, let's just think about what's happening here. So gold and gold stocks sold off sharply last year from October to December. If you look at a chart, there's a big sell-off. I was negative then. I try to catch these moves for my subscribers, stand aside, and get back in when the dust settles. So basically everything bottomed at the end of last year. So 2024, December, if you look at the GDX and most of these stocks, the sell-off concluded and they started going up. And believe it or not, I follow all the industry groups in the S&P 500, and gold is the best performing industry group in my database year to date. It's up 23, it was up 23% on last Friday. It's up more like 25% now. So it's been the best performing asset. And yet most of my clients really couldn't give a hoot, it's just like, still not even on their radar screen. So that's the overall view.
Let's talk about what's actually driving the gold price right now, because it has been very strong all through last year. In March, when it broke out, almost went straight up throughout the year. A little bit of weakness in the fourth quarter. And then to start this year, again, as you just outlined, a very strong performer. This is almost a 10-year long run that we're seeing in gold, though, bottoming in 2015, close to $1,000. Gold's almost 3 times higher than that right now. What, in your eyes, has been the major driver for gold over this 10 years, but then even more specifically over the last year?
Okay, more recently, I think it's central banks. Okay, so, this bit of like confiscating Russia's, foreign reserve assets, like there's a proposal, they're frozen right now, and Zelensky and other people want to like just confiscate them, and give them to Ukraine. So things like that, if I was sitting in a central bank in Hong Kong or China or the Middle East or somewhere, I'd look at that and say, whoa, you get on the wrong side of the US, what are they going to do? They're just going to freeze our assets, our dollar assets. So it's really, I think that's the secret driver. Well, it's not so secret, but you don't know what they're doing. But I think like basically they're buying every dip. So these reserve bank managers, they have huge, reserves, China, Hong Kong, emerging markets in Asia, emerging markets, Latin America. So they have to diversify. So there's a really like a dip buying mentality in physical gold. And of course, there's a squeeze going on now between London and New York and delivery, bars being shipped to the US for delivery against. So I think maybe the big dealers are getting squeezed on that. They've been, keeping the market down for years and years with the way they sell and do derivative plays and swaps and everything. So, but I think the major driver is really central banks, and that isn't going to go away. I think that's here to stay.
Yeah, central banks have been big buyers, and that seems to be a lot of the underlying strength of gold. But we also have started to see some Western investors, I think, pick up some of their buying. When it comes to gold stocks, more broadly, the whole sector, it's relatively a small sector in the financial world. The financial world continues to get bigger. The gold stock sector almost feels like it stayed the same size as we've seen this explosion in a lot of different areas. As you said, you talk to big money managers, and quite frankly, a lot of these gold stocks are just too small for them to even invest in because of where their market cap currently stands. Do you find more of these money managers being attracted to some of the ETFs, even the leveraged gold ETFs, rather than moving down into individual stocks?
Well, first of all, so the Belkin report, not the gold stock report, I have an outperform and underperform forecast list. These are stocks to buy and sell, longs and short ideas. And gold has been at the top of the list all year, since December. But, I get this response of like people yawning, hello, like most people couldn't care less. Like I said, it's not on their radar screen. So I think to answer your question, if they were going to do something, it'd probably be in GDX. And the way these algos knock things around, short-term trading, like at the end of last week, it was a great week for gold and gold stocks. And then Friday, they bombed everything. So it looked like short-term traders are maybe getting in, taking profits, make some money, and they get in and get out. These are not long-term investors. Now, I have a couple of clients who shall remain unmentioned who are big, billionaire family office kind of places, right? And these guys are all over gold. So I think those kind of clients, somebody who's been in it for decades, knows when to get in and get out. Those guys I think are on it. Hedge funds, I think their toes are barely getting wet. And just to take that a little bit further, so in the decline late last year, October to December, that was driven by Newmont and Barrick, which were the two largest capitalization gold stocks. And of course, Newmont went down because the Newcrest merger knocked the stock way down. It's down like 30% or something. And then Barrick got hit with the Mali gold confiscation, which has just been settled. So I was negative on those stocks last year, but those stocks are like in the 40 to 30 to 50 billion dollar market cap range, which will move the needle. Those stocks are two stocks that big institutions can buy. So if they wanted, they would buy the GDX or they'd buy Newmont or Barrick, a couple others, Anglo Gold, that's not quite as big, and AEM, Agnico. That's become the second largest cap gold stock, in the last month or two. But those are the ones that big institutions can get in and get out of. Just look at liquidity. You have to be able to get in millions of dollars, to move the needle. If you're running $1 billion hedge fund or something, you have to get in and get out without getting destroyed. So you want to be able to buy billions of something. So long story short, I just turned bullish on Newmont about 3 weeks ago and Barrick just this in the last week or two. So I think those got really knocked down. They were responsible. They're the biggest weights in the GDX. They knocked the GDX down. And I think those are buys now. And I'm not accustomed to recommending those two kind of obvious plays, but what the model likes to do is buy low and sell high. It's looking at things that have underperformed, that have turned the corner, ready to outperform, and then it wants to rotate out of things that have moved up a lot. So I'm not so crazy about Agnico at this point, but I am, like Newmont and Barrick are towards the top of my list. So that's kind of the overall view on large cap stuff.
Yeah, those two really have been underperformers when you look at some of the other major miners. But Michael, as you said, a lot of these big money players still aren't paying attention to the gold sector. Really makes you wonder what it's going to take. Gold is at almost $3,000, yet the GDX is still trading at levels when gold was at $2,000, and it's still off of its highs, well off of its highs from 2011. So why aren't these bigger money managers paying attention to the sector when the underlying asset, gold, is doing so well?
So basically, these guys, they follow the leader. I mean, I hate to say, here I am disrespecting my clients, but basically, what I see this just mindless psychology of buying large cap tech stocks. So it's the Mag 7. So what's happened, Corey, is the Mag 7 has turned into the Mag 1, right? Like, so the Mag 7 stocks before this week, the Bloomberg Mag 7 index was only up 1%. The S&P was up 4% year to date. So the Mag 7 had actually underperformed by 3%. And that was only, if you take out, Meta was up like 20 something percent and been up 20 days in a row until a couple of days ago. So I think that, they've just been forced by crowd psychology into this whole AI bubble thing. And I think that's going to, basically, I think that has, like I said, it's not working anymore. You're underperforming if you're long. So you're long Tesla, it's going down. You're long, Amazon, it's going down. You're long Meta, it just topped out a few days ago, it's starting to go down. So a lot of these stocks are actually down on the year, or they're way behind the index. So I think is forcing people to look at other stuff. And so to answer your question from the model perspective, I have the GDX. So I look at all these relative value things. So ratios, GDX divided by XAU, up. GDX divided by gold, up. So 3-month forecast, what you're talking about, I think, is in the rearview mirror of gold underperforming, gold stocks underperforming gold. And I think they are poised to outperform at the moment, just led by these large cap ones. But then the Belkin Gold Stock forecast has a list of, a long, long list of all these stocks that are supposed to be outperformed candidates in the US and Canada. And there's a lot of mid-sized and smaller names on there. I don't want to get into all the details here, but if you're interested, you can check out the Belkin Gold Stock forecast. But so basically, I think we turned the corner on that. Yeah, the GDX and XAU have way underperformed, gold. Gold's at a new high, way above its high from last year. GDX has not even got back to that level yet. And if you look at silver stocks, whoa, they're like way behind the GDX and everything else. But I have them all turning the corner.
Okay. Well, hey, a lot of these stocks have turned the corner. A lot of these stocks are doing well. I've been on record saying that this is one of the best environments I've seen for this sector in well over a decade. All seems to be a bit of a process here, but again, to your point here, where all these players, all these big money managers are into these mega cap stocks, they're not filtering down into the gold stocks. Maybe they're going to go into some of these majors. We have seen some of the majors do well. But what does that mean for even some of the smaller stocks? Is that still a year or two possibly out that the money does filter its way down into the smaller gold stocks?
I don't think it's that far. I think when the big ones start going up, it will kind of put this on people's radar screens, and then they'll start digging down. So, I follow all the stocks, not just gold stocks. Let's just talk about the other, like all the S&P industry groups and sectors in Europe and in Japan. And for all those stocks, there's like 5 or 10 analysts following every company, right? For gold and silver stocks, there's a few Canadian brokers that do a half-hearted. Not I don't want to I don't want to disrespect anybody, but it's basically what I'm saying is it's an inefficient market. So I see there's a lot more opportunities. Whereas if you're following Procter and Gamble or Meta or all these stocks, it's trampled territory. Everybody knows everything. There's not very many mysteries. In the gold and silver space, there are a lot of unknown, there's just complete unknowns that people don't know anything about. So what that tells me is there are great opportunities in these names. And to answer your question, I don't think it's a year or two out. I think as these stocks continue to rise and catch up to the price of gold, which, by the way, if the price of gold is this high, that means that the revenues and resource values of these companies are going through the roof. So they're undervalued. The price relative to what they earn and what their reserves are worth is just like, it's way under, compared to the stock market, or like I was looking at Ionic today. It's a, quad computing stock. It's like hundreds of times the revenue. It's like priced at insane levels. And where you look at these silver and gold stocks, and I mean, it's just a whole nother world. So I think there's big opportunities here. And I don't see a turning point quite yet, but I see it coming. But so there's just throw out a few names. Like, so they've been killing silver stocks, right? Like, I mean, in the price of silver going up and gold, like, Coors down to the ACDE. But I mean, so even those are kind of the major. So there's only about maybe 40 or 50 semi-pure play silver stocks. And, for big institutions, they might know about gold, physical gold, and they might know GDX. And beyond that, they don't know much about gold stocks. For silver stocks, I don't think they even know they exist. So the scarcity value of silver stocks, when the silver stock, so I have a buy coming on silver gold ratio too. So silver, it's not quite there yet, but almost. So usually in a gold bull market, silver outperforms. And silver's been underperformed massively for the last few months. I see a turning point coming, and then that should bring alive a lot of these silver stocks. There's a few just that are just in the gutter. I'll just throw out a few names, obvious ones. First Majestic, AG, it's been destroyed. It just started, and finally today it's starting to move up. Pan American, I mean, those are the leaders. But I have probably, let me see, I'm looking at my silver list. So 1 on antenna, I must got 30, 25 or 30 recommended names. And a lot of them are more mid-sized, not super small, not what I call moose pasture. I don't cover moose pasture, Mark Twain kind of stocks with a hole in the ground with a wire on top. I cover stocks that have, real reserves and hopefully earnings, not all of them. And by the way, one little segue there, Sprott has been doing a great job. They just came out with an ETF, a silver ETF, actively managed, and they're coming out with a gold stock ETF, actively managed. I think that could help bring some interest, as interest goes into, as investors become aware of what's happening in the gold and silver space. I think they might be attracted to those ETFs, and those ETFs buying these stocks will begin to lift these stocks. So I think there's a process underway. It's just barely started.
Okay, look, there are a lot of stocks still doing very well. Gold, even some silver names that have continued to outperform. It's really been a story of the have and the haves nots, where the haves have been completely outperforming. But Michael, to your point about these big institutions not even really having a precious metals trading desk or any analysts there, isn't that one of the big problems with this sector is that it had a pretty historic run well over a decade ago, almost 2 decades ago now, and investors have just moved on to other sectors. So will we see more analysts being added at these larger institutions to cover this sector, or do we need to understand that, look, maybe everyone's not going to come flocking back here, so it is more of a selective game we're playing in what is still a generally small sector?
Well, Corey, I wouldn't try to follow anything that the big hedge funds are doing. As far as I can see, they're just follow the leader. Like I said, like let's go, let's follow the herd.
But
Whatever the
isn't
herd is
gold
doing.
leading now? Aren't the gold stocks leading this year?
Yeah, they are, but it's not on their radar screen. I mean, I think, yeah, they're probably playing around a little bit, but for the most part, if you look at the sentiment indicators and positioning, things like B of A put out, they're still like long, they're long the stock market, first of all, macro traders. So if you look at positioning, it's super long in the futures markets. If you combine all the S&P, NASDAQ, Russell, Dow, all those futures, it's still the speculative positions are very large. And the biggest weights in those index are these Mag 7 stocks, which are underperforming. So I wouldn't like say whatever they're doing, I think is wrong. I think we're at a major turning point, a macro turning point. Okay, the stock market's really overowned, really overvalued. The economy, as much as I like some of the stuff that Trump and everybody's doing, deregulation, getting rid of some of the stuff, the bad stuff that's built up over the last 4 years, I think they've inherited a poison chalice. Okay, it's one way to put it. So, and I think the economy, if you lay off a bunch of government workers and you put up the tariffs and stuff, the economy is going to slow down. People are going to say, consumers are going to get hit with more higher prices. People, companies. I think there was a rush to import things before the tariffs. It made the economy look okay in the fourth quarter. That's kind of over. The tariffs are coming in now. I think so. The economy, I think, is heading down. That means earnings are going to not be what they think they are. All the tech stocks, those kind of things, they're going to disappoint. These guys are going to be scrambling for looking for other things, other investments. They're going to be hurt since they're already overweight all these things. So I see in the sector rotation, to me, this looks very similar to what happened in 2000. So in 2000, let me just pull this up for you. So from the market peaked. If you go back, if you weren't around, the tech bubble, March 2000, it had been their huge rip roaring rally, internet stocks, semiconductor stocks, 1989, peaked in March 2000. After that, so from the end of March to the end of December that year, 2000, the S&P fell by 12%, the Nasdaq fell by 47%, and but over that same time, utilities were up 43%, consumer staples sector up 39%, healthcare 36%, energy up 11%. So while tech was going down, all this defensive stuff was going up, and bonds went up 8%. So what I'm saying is, I don't think people are positioned for that at all. So the defensive stuff, but looking outside of gold, I think big institutional investors are going to be rotating out of the stuff that isn't working, which is AI and tech, which is overowned. Yeah, it's a big story, and we'll all be doing AI in 10 years, but we don't know who the winners are going to be, right? At this point, just like they didn't know in 2000, who were the winners going to be, and a lot of tech stocks disappeared. They went out of business. So gold is at the top of that list. So I think tech, there'll be this rotation out into bonds and defensive stuff. I don't know if it will be as dramatic as in 2000. I'm not saying something's going to be exactly like that, but similar kind of scenario. And so I think they will be looking at defensive stuff, and with gold price going up, central banks buying, the earnings of gold companies going up, and really still really depressed. I think it's a buy. The model likes to buy low and sell high. It sees a turning point coming. So I think it's a great opportunity right now in the gold and silver space. It's in the path of progress. It's where it's going to be discovered. A lot of these stocks are in the gutter. They're turning up, and so Templeton, what he said was the time to buy is at the point of maximum pessimism. Time to sell is at the point of maximum optimism. So I think we've reached that point in the tech AI bubble. Point of maximum optimism. I think we're going to go down for a long time. I think it's a major top, and the dollar has also topped out, by the way. So I think the dollar going down is going to help gold keep going up. And, I think the gold and silver stocks are in the gutter, and I think they will go up.
Okay. So it's that rotation of money. I don't find that the gold stocks are necessarily at the peak pessimism right now, as they have done pretty well. I know some people are still disappointed at some of the underperformance, but there has been an uptrend here that a lot of these stocks have been riding. However, that uptrend is arguably less than a year old because of that breakout in March of last year. So what you've laid out here, Michael, very positive for all of you in these precious metal stocks, especially in those gold stocks, just waiting for those underperformers to play catch up. I'll post some contact information for all of you to reach out to Michael and get some insights on that Belkin gold stock forecast. It is a great resource for all of you looking to invest in individual names within the gold sector. Michael, great having you back on the show. Thanks for taking time with us today.
Thanks so much for having me, Corey.